All right, so hey guys, we got another red day in the market, and I just wanted to take a little time to talk about why the markets are seeming red, and then I also wanted to spend a second to give y'all a little portfolio update of where my portfolio is standing. So stick around to see that. Let's go ahead and go in here and just see how the market's been performing. You can see right here on the Wall Street Journal homepage, we have the Dow Jones down 0.5%, the S&P 500 down 0.75%, Nasdaq same, and Russell 2000 down 0.5%. So if you're invested in pretty much anything or anything everywhere, you're losing money today. And one of the reasons why we've been seeing this has been from a report coming out from Jamie Dimon. He's the CEO of Chase Bank, the largest bank in the world. And I wanted to get into that with y'all, go over it, and talk about some of the things that he said because he has a little bit of insight into most people's pockets around the world. So lots of times, whenever he warns people of things, he knows what he's talking about. So right here, I have pulled up a couple different articles from the Wall Street Journal. Right here, this one says Jamie Dimon says U.S. consumers still have 6 to 9 months of spending power. So that is 6 to 9 months right here. And what that means is that the average consumer today still has extra money from the stimulus checks given out during COVID-19. People are still holding 6 to 9 months worth of extra spending power that they can put out and start buying things with. So let's just go down a little deeper into this article. Right here it says JP Morgan Chase and co-executive CEO Jamie Dimon said U.S. consumers still have 6 to 9 months of spending power left in their bank accounts, but warned of an economic hurricane. We're going to continue seeing language and diction used like hurricane and warning. A lot of fear is coming out of this guy's mouth. Down here further, he continues to talk about how much money people have. He says that he estimates that some $2 trillion in extra funds are still waiting to be spent. And that fiscal stimulation is still in the pocketbooks of consumers. So that's stimulation from COVID-19, and he's seeing that still in the bank accounts of JP Morgan consumers. Right here, the Wall Street Journal talks about how U.S. households have boosted spending for a fourth straight month in April. So this just came out recently. This is the Consumer Spending Report, and what it also says is 4 straight months of increased spending, but the rate at which we are setting aside for savings, so the amount of money that you're saving, is at its lowest point in 14 years. So, well, actually, I have this article right here where they talk about this. So, this is households boosted spending in April for the fourth time in a row, but drew heavily on savings. So, this is a key point right here, drew heavily on savings. What this article talks about on the Wall Street Journal, it talks about how people are continuing to spend. It's a habit of spending more and obtaining more, but it's gotten to the point where nowadays spending is at a savings rate is at a 14-year low. No one's saving money anymore, and we're at the point where we could be seeing a recession coming soon. So that's something very scary that people are spending more and saving less. So after we talk about how much money people have from stimulus and all the savings, JD Dimon further goes down this hurricane that we're expecting. He said Wednesday that there was an economic hurricane brewing. For instance, he said the war in Ukraine continues to roil commodity markets and could push oil prices above 150 a barrel. Whenever he said this, we're about 116 a barrel. And crude oil prices, whenever that increases, all shipping gets more expensive, transportation gets more expensive. Generally speaking, all the prices of everything inflates. So we're seeing a lot of different things here that I want to get together and bring for you in a point of view on why the market's dropping. So we're seeing that a potential ability for crude oil and other commodities to increase. So an increase the price of crude oil. And then JD Dimon was also talking about the 6 to 9 months of extra spending that consumers have. So there's extra money, more spending that we can expect in the future, and both of those mean that the prices of goods are going to continue to go up when demand goes up and when the price for crude oil goes up. So what this means is that we can expect potentially even higher inflation rates. And inflation is a big topic right now. With a higher inflation rate continuing from these pressures we're seeing right now, that can mean that the Fed might have to stack up rates even higher than they're already doing it, potentially at a faster rate, maybe a 3 basis point rate, which is 75.75% of the federal funds rate. So we're seeing a lot of fear. We're talking about this economic hurricane. The markets are dropping and dipping. And I just wanted to let y'all know why I think the markets are acting the way they are. A lot of it has to come from what JD Diamond's talking about. And then what I want to do for y'all is I want to show y'all my portfolio. So right here, I'm going to pull up my Robinhood. And this is my personal Robinhood. I also have money saved with Vanguard and my Roth IRA, but this is my Robinhood account, and I just wanted to do a little update so y'all can see where I'm at and what I'm holding. So overall, you can see in the past year, I've had a bad 6 months pretty much since November, as a lot of people have. It's been pretty much a straight decline since then, and I'm down about 10 to 11%. And comparing that to the S&P 500, they're down only about 3%. Now, a lot of this is because I was solely in individual stocks until about January, late December, when I decided to get out of individual stocks and go into index funds for myself. So as you can see right here on the right, that's all of the things I'm holding. I'm holding the S&P 500. I'm holding QQQ, which is 100 of the NASDAQ's top companies. You can see right here, actually, their top holdings are like Apple, Microsoft, Amazon, Tesla, Google, Facebook. Big companies, big names, but more technology focused in that index. And then IGV, this is something that I've lost a lot of money in. You can see since my position started in January, I'm down about 20% just in this holding. And what IGV is it's tech software. This is a type of business model that I really like. I like companies like Microsoft and Adobe that work off of paid renewal subscriptions where they're getting a constant source of income. And you can see that this is made up of Adobe, Microsoft, Salesforce, Intuit. These are services online that companies and individuals use. So I really like this business model, but since that sell-off in November, you can see that they've just had a very rough time. Moving on further, I own 2 more index funds. I own Vanguard Small Cap, which is just a focus of small cap companies, which has been doing worse than the S&P 500. And then I also own a large cap China ETF. I actually bought into this at a pretty decent time, it seems. I'm only down 8%, which is less than the S&P 500 since January. Maybe not. I don't remember. Yeah, since January, you can see I was down 18, now down 30, so about the same as the S&P 500. My cost basis is at $34, so it's about the same as right about buying in at this dip down here. Yeah. Then I've recently grabbed onto 2 individual stocks. Google I've actually had for a little bit. There's smaller positions in my portfolio. Google I've held, and overall I'm only up 3%, but I used to be up about 30% in my Google position. And Amazon is a very recent buy. It's only about $150 is what I bought in with. And since then, I'm already up 13%. I bought heavy on a dip when Amazon was about 2,100. You can see in this 1 month view, they dropped down to this 2,100. I was very comfortable purchasing Amazon at this price. So I bought some Amazon, and they've done very well since then. But that's my portfolio. That's how the stock market's doing right now. So yeah, that's my portfolio. That's how the stocks are doing right now. That's what Diamond said. So I hope you enjoyed this content. And if you did, please like and please subscribe. I'd really appreciate it. Thank you very much.